Welcome to the Roy Morgan Weekly Update. I'm Julian McCrann, the manager of the Roy Morgan poll, stepping in today for Roy Morgan CEO Michele Levine, who is unavailable to deliver the weekly update. Firstly, the Albanese Labor government has lost support and now only has a narrow lead after Treasurer Jim Chalmers delivered the federal budget last week. The ALP is on 50.5%, down 1.5% from a week ago, compared to the Coalition on 49.5%, up 1.5% on a two-party preferred basis. If a federal election were held now, the result would be too close to call, with a hung parliament and the support of minor parties and independents required for either the ALP or the Coalition to form a minority government, the latest Roy Morgan survey shows. Some reasons the ALP vote declined are outlined by Roy Morgan CEO Michele Levine in the federal voting release. In a climate where Australians are concerned about cost of living, inflation and the housing crisis, the Reserve Bank has drawn a causal link between the housing crisis and immigration levels. The Reserve Bank has stated high immigration is driving rental inflation, and this creates a housing crisis for many Australians. The government's failure to tackle high immigration is hurting the government. Coalition leader Peter Dutton has stated the Coalition will cut annual permanent migration to 140,000. The government's commitment to hand billions of dollars as tax rebates to Australian billionaires to create clean technology, such as green steel, has not resonated with electors. And the $300 per year household electricity rebate will be only a drop in the bucket compared to increased mortgage payments and rising food prices. The other indicators show more positive results for the ALP government. Both government confidence and consumer confidence improved this week, but they are both still low. Government confidence is up 3 points to 80.5 this week, and that's up 7 points in the last 2 weeks. However, the Albanese government must be concerned that a majority of Australians still say the country is heading in the wrong direction. 52% say wrong direction, only 32.5% say the country is heading in the right direction. As a result, Roy Morgan government confidence remains well below the neutral level of 100. This week there is a slight boost to consumer confidence, with ANZ Roy Morgan consumer confidence up 1.8 points to 82. Now, over a fifth of Australians, 22%, which is up 3 percentage points, say now is a good time to buy major household items, while 50%, down 2 percentage points, say now is a bad time to buy, and that's a net improvement of 5 percentage points in 1 week. However, despite the weekly improvement, longer-term consumer confidence has now spent a record 68 weeks below the level of 85, very low for a very long time. More recently, consumer confidence has moved in a narrow band of 80 to 85 over the last 24 weeks, well over 5 months since early December. Now, looking at an analysis of consumer confidence by housing status shows Australia's housing market is split roughly equally between outright homeowners, people paying off their home with a mortgage, and renters, so it's about a third in each group. Consumer reaction to the federal budget was relatively muted for both homeowners, down 0.7 points to 85.6, and people paying off their home, up 0.7 points to 75.6. However, there was a significant boost for renters, up 3.9 points to 83.8. And this is the highest consumer confidence for renters for exactly a year, since last year's federal budget in fact. Renters are less impacted by the Reserve Bank's decisions on raising and cutting interest rates, whereas these decisions have a large impact on the consumer confidence of the other two groups, especially those paying a home off. So compared to 2 years ago, when the RBA started raising interest rates, the consumer confidence of people paying off a home is down a massive 25.8 points. The consumer confidence of renters is down only 5.9 points over that same period. It's a huge difference. And the federal budget had no impact on inflation expectations, which this week are unchanged at 4.8%. So Australians now expect annual inflation to be 4.8% over the next 2 years. Inflation expectations have stayed within a narrow band of 4.8% to 5.3% since early December, so over 5 months. Now, looking at Australians suffering from mortgage stress, Roy Morgan is the only company to measure mortgage stress every month. The latest mortgage stress figures show an increase of 29,000 in April to 1,560,000 Australians in mortgage stress, and these are all mortgage holders. That is 30.8% of all Australians with a mortgage are now at risk of mortgage stress. The level of mortgage stress in April represents an increase on March, but is still below the highs reached in January and February earlier this year, soon after the RBA's most recent interest rate increase, which was in November 2023. The lower level of mortgage stress in March and April, compared to earlier, has been driven by rising household incomes, which has reduced the financial pressure on some mortgage holders. In addition, the extended pause in interest rate increases since November, over 6 months now, has allowed this growth in household incomes to catch up and reduced the financial pressure on some mortgage holders. The same reduction in mortgage stress was seen after the RBA paused interest rate increases for 4 months last year, from July to October 2023. We saw the same thing. And finally today, the latest Roy Morgan readership figures for the 12 months to March 2024, released yesterday, show that news matters. 97% of Australians, an estimated 21.5 million people, consume news in any given month, either in papers or digitally via online outlets or apps. The most widely read category of news remains the general news category, with a unique audience read by 20.6 million Australians, equivalent to 93% of the population. Perhaps unsurprisingly, nearly 2/3 of Australians, 65%, or 14.6 million, turn to the property section, the second most popular overall. In third place, we have sport, read by 13.1 million Australians, about 54% of the population, just ahead of lifestyle and health on 12.1 million, entertainment and culture on 11.3 million, and business and finance, which is read by 10.5 million. So the latest Roy Morgan figures on magazine readership are released today, and they show over 15 million Australians read magazines in print or online, equivalent to over 2/3 of all Australians. An impressive 9 out of 16, that's a majority, magazine categories have increased their readership compared to a year ago. So for detailed information on the latest Roy Morgan readership figures for magazines and newspapers, and the Think News Brands analysis, visit the Roy Morgan website. And that's a wrap. Thanks for your interest this week in Roy Morgan's latest results. And next week, hopefully, we'll have Michele, Levine, our CEO, back on board to bring you the most up-to-date readings on consumer confidence, inflation expectations, and voting intentions over the next week. So subscribe free to our Roy Morgan YouTube channel for all the latest political, economic, and market research, data and insights. Thank you.